have the big players, the players that have billions of dollars. If I had to start all over as a beginner, it's definitely a strategy that I would trade every single day. So today we're going to talk about trading supply and demand, because if I had to start all over as a beginner, this is definitely a strategy that I would trade every single day. And the reason why is because when it comes to trading, guys, we have the small players, which is us retail traders. We're talking about, traders that's actually trading from home. And then we have the medium-sized players. And these players, are like prop firms that have traders working for them. And they are trading around maybe $50 to $100 million, right, on the capital. And then we have the big players, okay? We are talking about the players that have billions of dollars to play around with when it comes to trading the market, okay? Now, the big players, they are much smarter than us. They have more information than us, right? They are much quicker than us, right? Overall, they can move the market. So you have to understand, when it comes to the market, it's best to follow the big players because they control the market, or they are able to at least push up the market or move the market. And we want to follow these big players, okay? When it comes to success, guys, success leaves clues, okay? Now, same thing with the market. Big players, when they come in, they leave clues. And the clues are supply and demand. And that's what we are going to talk about today. Now, when I trade supply and demand, I trade something that's called short-term supply and demand. What I use is the 5-minute chart, and I use the 5-minute supply and demand levels. And if you look at most people online, they will show you zones that are on a higher time frame, maybe the 4-hour, the 1 hour, and they will use those zones, right? And as soon as price hits those zones, they would probably drop down to a 5-minute and maybe try to enter in there. I don't usually do that, okay? I like to look at the higher time frame for my support and resistance. Now let's go to the chart real quick. So when I mean, when I'm looking at my higher time frame, guys, so let's say that this is the higher time frame right here, okay? And the market's going up. Now, 2 reasons why I don't like to use the higher time frame. I like to trade every single day. Sometimes I'm trading one market. Now, if I'm looking for a higher time frame to come to a higher time frame supply and demand, it might not come today, all right? I might have to wait a week for that market to pull back to this demand. So let's say this is a demand level right here. I might have to wait a week or two just for the market to pull back to that demand level. So what I like to do is I like to use support and resistance. And then when it reacts to that support and resistance, I like to get in. So let's say that this is the 5-minute chart, right? And we have, let's say we have resistance up top, and we are coming to that resistance, right? And then the market hits that resistance and sell off. Now, this sell off right here is called supply, and we're gonna talk about that later. Now, this is what I want right here. I want the 5-minute to come back to this supply right here because we created the supply on the 5-minute chart, and then I wanna take that trade to the downside. So let me show you guys some examples on some charts real quick. All right, so when it comes to supply and demand, we are looking for aggressive selling and aggressive buying, okay? So for the most part, you really want to see maybe 3 aggressive candles in a row, or maybe 3 aggressive red candles in a row. But sometimes you might get maybe like this right here. We have aggressive selling right here, and there's only like 2 candles. But for the most part, in general, you really want to see 3 candles or more. Okay, so right here, right, we have aggressive selling right here. So how do we get in? First of all, we have to mark down our zone. The best way to mark down a zone, right, is actually 2 ways I do it. I actually either, if it's not a lot of information around here, I just use the first candle that pretty much started to move to the downside, right? So notice how the market came to that supply zone and then didn't react at all. This is why in the beginning, if you are trading supply and demand, it's best to wait for reactions, because some of you guys want to get in just because you see a zone and the market might blow past that zone. So it's best to wait for some type of confirmation. We're going to talk about that right now. So we blew past this supply zone right here, right? Remember, supply is when the market's going down, demand is actually when the market's going up. So notice how we have this aggressive selling. This is not us, guys. We can't push down the market like that. And also notice how we have this aggressive buying right here. This is not us. Again, this is the big players that have billions of dollars that can actually move up the market. So we want to follow them because, again, they are much smarter than us, much quicker than us. They have more information than us. So we need to follow these guys because the whole idea about this strategy is when price comes back to this zone, it's a strong possibility the big players might come back in the market and push up the market. Now, might push up the market only for, maybe for, 5 minutes, or they might push up the market all day, but we don't know. As long as we have a opportunity to get in the market and scalp it or day trade it, we are good to go. So right here, notice how we have a demand area right here, and the market never came back to this demand area. So this is a good one right here, because a lot of people always ask me, hey, what if the market never comes back to the level? Oh, well, skip that trade and wait for the next trade. So notice how we have another strong push to the upside right here. And now we have our zone right here. Okay. So the market came back to that zone. Notice how we have a nice bullish bar right here. So we are going to either use a bullish bar or a nice rejection bar, or if the market's going down, a bearish bar or a nice rejection bearish bar. Now we can also use a double bottom or double top, okay? And we're gonna show you guys some examples later. So right here, we have a nice bullish bar right here, and we can actually get in and look for a nice scalp or a trade to the upside. Now, your exit could be the high, okay? Or it can be, a trail where you're trailing your stop loss. There are so many ways you can actually get out the market, but the easy way right now is just maybe just go for the high, and until you get used to understanding the market, and then definitely can go for much bigger targets. Now you can definitely say, you know what, I want a fixed target, only 2-to-1 or 3-to-1. You could definitely do that too. Now, where do you want to put your stop loss? You can also put your stop loss either below the bar that you're getting in or below the zone. Okay, it's up to you. Every trader has a different way they use their stop loss, so it's up to you. You back test that and see what works for you. Now let me show you guys another example. All right, guys, so right here we have aggressive buying right here. You see this right here? Aggressive buying. Now, before we had that aggressive buying, we had aggressive selling. You see this right here, guys? Look at all these red candles in a row. So as soon as the market comes back to this area right here, we want to look to sell the market. Now, check this out. Again, remember I said that if I'm looking at the market, right, how do I want to draw my zone? You can start with the one candle that started the move, or you can look at the candles that's around the move. Okay, so a lot of times if it's a lot of candles that's around the move, I would just put my zone around that candle, because sometimes it would never come to that last candle. Okay, but anyway, it came to that zone. Notice how we have this rejection. Okay, so this is the rejection way to get in. Okay, nice rejection candlestick. Short this right here, and you can look for again a nice 2-to-1 or a nice target, maybe to a support level or demand level. Okay, now we have demand right here. Now this market is a ranging market, so you can definitely use the tops and bottoms. So we have this aggressive buying right here, and notice how it came to that demand level right here. Show you a nice bullish bar. You can definitely get in right here for that scalp or to the upside right here. Let me show you guys some more examples. All right, so here's another example right here, guys. Notice that we have a nice sharp move to the downside. Okay, it came back to this supply area. So again, I noticed that we have a lot of candles around it, so I would just put the zone like this, right? Notice how we have selling, and we have a nice little double top situation going on. So I told you guys before, you could use a nice bearish bar or bullish bar or a double top. Okay, so we have a double top going on, and you can short this. Again, you can put your stop loss either above or below the setup or above the zone. Is up to you. And you look for an exit maybe at a support level. Okay, so that is another example. Let me show you guys another one. So right here, guys, we have a demand example. So we have aggressive buying to the upside. So notice how we have that aggressive buying. Okay, notice how we have this nice bullish bar, and again, you look for that long to the upside, and you look for your target. Okay, now I do have a supply and demand indicator that will help beginners spot these supply and demand zones. Let me show you guys that real quick. All right, so here's the indicator, guys. Now we have this demand level right here. Okay, now first we had another demand level, okay, right here. Now notice how it came here, and then it shot up, and then it dropped. Again, you're dealing with an indicator, so it's up to you if you want to take this demand level or this strong one. It doesn't matter, guys, because you're not going to win 100%. Okay, I want to show you guys some losers too. So if you took this one, this is a loser. Now it came back to this zone right here. Notice how the indicator shows you long confirmations too. It will help you, maybe just give you confirmation to get in the market. And notice how it went long right here, and then this one got back your money and plus some. So let's say this was a loser right here, you would definitely got back your money and some with this trade. So this is the indicator right here. Again, this is for beginners to get your feet wet if you don't understand supply and demand. If you don't understand supply and demand, this actually comes with my program for free, and that's in the description, so check that out. I actually have a special going on, so make sure you check that out right now. Now let me go to another example. Okay guys, so we are back. Now look right here guys, we have a nice aggressive buying right here. Now notice how the market went below this zone right here. Okay, this is a very good example right here, because some of you guys see this and maybe you won't take this trade. Now a lot of people will say if it breaks the zone is invalid. Me personally, I say if it breaks it just a little bit and price goes above that zone again, to me, the zone is still active. So right here, notice how we have a nice double bottom right here. Okay, and also, bullish bar coming in. To me, this is a long to the upside, and you could definitely have a nice winner right here. Okay, so let me show you guys some more examples. So right here, guys, we have a supply example. Now notice how we have aggressive selling to the downside. Now again, we have a zone right here, but it never came to the zone. Okay, now we have aggressive selling right here. Okay, now it came to this zone right here. All right, and this is something recently, a trade that I was in. Notice how we came here, we had a nice rejection. To me, that's a sign that I need to get in the market. Short position right here, guys, for a nice scalp to the downside. Again, you can look for a rejection, double top, whatever the case is, and you go from there. You can put your stop loss above the zone and you go from there. Now let's look at the indicator real quick. Okay, so guys, look at this right here. The indicator showing you this nice supply right here, but again, never came here. It show you this supply right here we talked about. It came here. Notice how I have a nice short confirmations right here, and price went to the downside. So again, you can do this to get your feet wet, or you can just train your eyes to look for supply and demand yourself. I don't talk about the indicator too much, but again, if you know how to read price action, you can do this yourself, or you can use the indicator to help you. Now, let's show you guys some more examples and we're gonna wrap this up. All right, guys, so we have aggressive selling right here, and basically the market came to this nice rejection, okay, short right here. Now, I know some of you guys are gonna ask me, can you short the level more than once? And the answer is yes. But, just be careful, because sometimes it will blow past the level the next time. So look for a decent reaction. Right here, we had a nice double top. So you could definitely had a nice scalp to the downside. And also notice how the last one, we broke the zone. Okay, remember I told you guys before, if it breaks the zone, it doesn't mean anything. Now, did it go far? Right? If it just breaks the zone just a little bit, notice how it just broke the zone a little bit. To me, that's still a valid trade. So notice how you still have another trade going on right here. Okay, and boom. This trade was a nice winner. All right, guys, so that's pretty much the supply and demand strategy that I use. I'm looking at the 5-minute supply and demand zones because I like the most recent zones, especially on the 5-minute chart, because again, the 1 hour or the 4 hour zones, the market might not reach those zones, today, okay? Or sometimes those zones could be so wide to the point where, it's just like, okay, do I short it right here, the beginning of the zone or the top of the zone? But anyway, that's how I like to do it. You can actually use the higher time frame zones. There's nothing wrong with that. I'm all for it if it works for you. But this is the way I like to do it, and back test this, see if it works for you. Again, guys, this is how I'm doing it, and this is definitely a strategy that I will use if I'm starting right now as a beginner. If you enjoyed this video, hit that like button, hit that subscribe button, and also if you want to learn more, guys, check out that special below in the description. It comes with that indicator for free. And also, if you have any questions, comment below, because I try to answer all your guys' questions. Thanks a lot for your time, and please have a great day.